Welcome to the Hybrid Real Estate Professional Podcast, where we dive deep into the intersection of career, family, and finances. Learn the mindsets, tips, and strategies to help you on your personal journey to build a life of abundance and purpose for you and your family. Now here's your host, Aaron Amin. Welcome back to another episode of the Hybrid Real Estate Professional Podcast. Today, I'm joined by Pat Zingarella. Pat is the CEO of Invest Clearly, a site dedicated to helping LPs find and evaluate syndication and fund sponsors and deals. Pat is also an active real estate investor with a portfolio of multifamily and commercial properties. We talk about the value of transparency, running a tech startup, his background in sales, and what his long-term vision is within real estate. This conversation is wide-ranging, and there's something in here for every type of investor. Hope you enjoy. All right, welcome to the Hybrid Real Estate Professional Podcast. Today, I have a friend of mine and a special guest, Pat Zingarella. Pat, I've had the pleasure of getting to know you over the past 6 months or so. We're in the same mastermind community together, but I'd love for you to just introduce yourself to my audience here in your own words. Tell us a little bit about what you're all about.
Yeah, awesome. Thank you, Aaron. And I'm pumped. I know we've been talking about me coming on for a little while now, and I actually love the basis of this podcast, just that hybrid thought process, applicable skill set. And I firmly believe that everyone has a skill set that they could monetize, because they obviously are just in a different dynamic. They're getting paid by a W-2, but there's that mindset hurdle to go through entrepreneurship. So that's fantastic. So my background, currently, I'm an active real estate investor. I'm buying small multifamily properties locally. And I'm also the CEO of a software company called Invest Clearly that caters to the syndication space. The way I got started, I was a corporate America sales rep. I had done that for my entire career, always in the account executive role. I was a B2B service-based business working with startup CEOs in the tech space. We would essentially advise them on go-to-market best practices, how to structure products, and then anything that has to do with creating revenue. And during my time in that world, I always knew that there was a life that was bigger than what I was living out there. And very quickly started getting exposures to networking groups and coaching programs. But it all started with listening to podcasts. One of the biggest roles and responsibilities as anyone in sales or investing is prospecting. And every single day when I would be prospecting, I'd have my headphones in, listening to Bigger Pockets or some sort of financial independence podcast, which then led to the exploration of real estate investing. And my goal was to start out small, buy the duplex, maybe house hack it, and then a 4-unit just sort of dropped in my lap, if you could say. I was getting my real estate license with my wife just as like a support system. I never really practiced, but someone in my real estate class had a 4-unit that they were selling. I was like, okay, this makes a lot of sense, and ended up picking up the 4-unit as my first property. And I'll probably get deeper into that story as we go through how I got to Invest Clearly, but that's how I got into real estate investing. And then from there, I bought some larger. I have some commercial real estate. I love the multifamily side of things. And then we're also, as I mentioned, building out the website as well.
Awesome. Yeah, I definitely want to get into your company, but I think let's start chronologically a bit. So you were a corporate sales rep. Is that the right?
Yeah, that's correct. Yeah.
And then you moved towards, if I remember correctly, supporting sales for even some coaching programs, correct?
Yeah. So the journey in itself, it started with me being in a W-2 role. And then I ended up meeting an individual who, and this whole journey connects to everything. It's wild how the world works. But I was in the corporate world. I was doing sales and COVID happened. During COVID is when I really started doing going really deep into the real estate prospecting, because I had a lot of time. And I was working from home and it was easy to balance both things. And I met this individual who I met him through a coaching group. And he was quickly becoming a personality in the Bigger Pockets world. Everyone's wanted to be around him, wanted to be in his sphere, wanted to be like him. He was wholesaling commercial real estate, absolutely killing it. And he was young. He was 27 years old and I was posting these massive checks. And so I brokered a relationship with this individual because I was like, I can help you. I want the life that you're creating for yourself. I want the large real estate portfolio. And so I connected with him and I started doing prospecting for him almost. And the deeper I got with him and the more prospect I was doing, it was like a trade for mentorship. Hey, I'll make calls for you. You coach me. We'll both be happy. It's a valuable thing. So I was bringing him opportunities. And all of a sudden he said, hey, I'm actually grown to the point where I need somebody, are you willing to leave your W-2 job? And I was making a significant amount of money at my W-2. I'd been there for 6 years. I was a top performer. And I thought, though, this is my journey into financial independence and entrepreneurship and applying my skill set in sales to that journey. I ended up leaving my job, taking a 75% pay cut on like a let's see if it works sort of trial. And then during that process, I can't talk too deep about this, and there's reasons for that. But let's just say this guy was not who he depicted himself to be. And that got found out by a number of different people. It got found out legally. That's still going on. But during that time, I was like, I got to get out of here. And so I really thought to myself, okay, I have limited funds. I pretty much just left the career where I was getting paid a lot of money to sell. And on my way back, my mindset coach was like, hey, we actually need a sales rep. So I was like, all right, this just makes way too much sense. And so I started doing sales for that, and it turned out to be I turned it into almost like a sales consulting business where I was taking on multiple clients. But that mindset coach sales was like the best thing that had ever happened because it was a sales gig where I was a user of the product. I was a success point of the product. And on top of that, I was learning just as much from the people I was selling to than them from me because I would talk to real estate investors just wanting to get started. I talked to people with thousands of units individually. So it was like this benefit. But from there, I realized almost what's possible with with the skill that I had. And it was an interesting journey because the more people I met, like the more I would say I realized that there isn't much of a difference from people who want to start a business and do start a business besides just starting the business. And that was what led me to actually like honing, or actually, I would say launching the business in and of itself rather than just being an outsourced sales guy. And I say we because I eventually brought in a partner, but I started selling for different like real estate adjacent things, right? This mindset coach would really niche down to real estate investors. I ended up selling a marketing service that was for real estate investors, a direct mail marketing. And I was selling for them. Then I was ended up selling for a digital marketing service for real estate investors. So it's like we had this background, this niche, this interest, and this passion of mine, and it matched up perfectly with the skill set I had. And so I merged the two together, and it's okay, we've got something here.
I think Pat should be the new host of this show because you are pretty much the exact archetype of a hybrid real estate professional, someone who had a background, and built a valuable skill set in your corporate job, pursued your interests, which led you towards real estate. You put yourself in the room with people who were doing what you wanted to be doing. You learned a couple of lessons about, obviously, it sounds like maybe there was some things that were not as they seemed, which I know connects to the business that you now started too, which we're going to talk about. Then you worked with a coaching program, you got exposure and networked with all these other individuals who are investing, sounds like across the spectrum. Some people that had a couple of houses and some people that were investing in big deals. And so you just got us exposure to the types of people that you wanted to be interacting with. You let that follow your passion and turn it into now you run a business centered around real estate. I think it's an amazing journey. So before we get to the company, you mentioned the quadplex.
Yeah.
And we're going to have to hear that story here and how, see, also just one thing I love to have people describe to the listeners is there's a feeling of anxiety and there's a really pivotal moment in everyone's investing career before they pull the trigger on that first investment where there's a gravity behind that decision that's hard to unpack. And so I'd love for you to just explain like what led up to that purchase and how did it feel once you finally made it?
Yeah.
And then pivot towards the company.
Yeah. And one of the things, so the biggest thing to pay attention to my journey is how I think one of the people's biggest fears with investing in entrepreneurship, there's two parts of it, right? It's the fear of success and the fear of failure. And that's what prevents people from getting started. But I don't think they recognize how easy it is to bounce back. Like it truly is. And that's where my story and my origin story to where I am today is a constant, like it's a bounce back story. And I'll talk about the quadplex. So I very much think that first deal is the hardest one to do. There's such a psychological barrier when you're staring at a spreadsheet for so long, but you realize I have to do this. And I think that emotional side of things overpowered some of my analysis. And so one of the biggest things about me is I'm very much like high energy, excitable. I'm extremely high eye on the disc profile. And so I'm an easy sell and I could get sold the dream and buy in very quickly. The analysis side of things is just not my strong suit. It's never been. Luckily now in my life, I have things put in place to balance that out. But with this quadplex, looked fantastic on paper, looked great on paper. Rents made sense. Everything looked good. But there were so many things that I didn't know that I didn't know. I didn't really know how to read an inspection report. I didn't know what a soft spot on a roof meant at that point in time. And the only person that I was bouncing conversation back and forth with was the person that was selling me the building, who I got to know as a friend. And I was like, all right, this guy knows a lot more than I do. Let me work with him. Da 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 da. I sent the spreadsheet to a couple people. It made sense, but there were so many like qualitative aspects that didn't show up on the spreadsheet that people need to pay attention to that I just straight up didn't. So what I had done is I went all in on this building. This was in my mind, like this was my start, right? I'm doing this. This is my first step towards the $50-$100 million portfolio that I plan to do. And that psychological barrier was tough because what I had done is I went pretty much all in on my cash. I sold my employee stock purchase plan that I had at my company and I had been building for 6 years. Pretty much had to wait until I had to time it. So, because with employee stock purchase plans, there's blocked out windows. So I had to wait until it opened to sell at a specific time, regardless of what the price was at that point in time. I had to do it. So I went all in. I think I had like almost nothing left in like my personal account. And so we got it closed and I was jacked up, right? I was like, this is amazing. I finally did it. I think within 2 weeks, the insurance company emailed me and said, if you don't replace the roof, we're not going to insure you. So I was like, okay, my property manager goes, hey, it's going to be 25 grand to replace the roof. And I wanted to die at that point in time. So that that high, just like it went down. It went down so quickly. And luckily we were able to negotiate. Okay, the inspection reports has got 9 years left. And then it was just, okay, you're good. It was like the quickest, sharpest, like downward slope to back up where my property manager's, oh, I've already collected a quote. I was like, you collected a quote? I don't know what's going on. And so from there, the next step was, hey, we've got one vacancy. Let's get this thing rented. And so we're trying everything, and it wouldn't rent. It was a weird unit, would have been the highest rented price on paper. And then my property manager at the time sent me like almost like a snipping of the credit report. There's a very small ding. It doesn't really matter. We would rent to them. I was like, okay, perfect. Went against my instinct. And I was like, all right, let's get them in there. 2 months later, COVID happened. Everyone stopped paying rent. So it was like, I spent 2 years analyzing properties. I finally got one. And then the weirdest thing in the world happened where these guys literally don't have to pay me rent. And so we went through the process. At the same time, that one tenant that had the credit ding obviously became a problem, right? There was a program in Lee County, Florida at the time where if you just contacted this like program, they would pay your landlord directly. No need from the tenant. Tenant refused to do it. Nothing we could do. Never got paid for that person. And so it was and I call it a bounce back like process because a lot of bad things happen, but I will tell you every single one of those I will never repeat, right? And luckily we ended up selling it like a year later, didn't lose money. We got out of it at the right time. And then I bring that up to talk about like how I'm pretty bad at due diligence, and which leads into everything else.
That's an amazing story. Thanks for unpacking that, even though it might bring up some PTSD on some of the stuff that happened. But honestly, it's such an important lesson on taking action, which is something I know you and I both share a passion for. I'm excitable too. And I sometimes latch onto an idea, and especially with that first deal, it's like the idea of actually having accomplished purchasing and starting to operate a rental property. It is an identity shift too. That's something that I think people maybe don't realize as much. It's like yes, you're buying something, but it feels different than if you just buy a few shares of stock. Like you are becoming a real estate investor. You are opening and operating a business. And people that don't treat it like that usually are in for a rude awakening.
Yeah.
And so the lessons you learned, even though you had to empty out your piggy bank, even though you had some rough stuff happen there, people pay hundreds of thousands of dollars to go to college, and some of them walk away with less practical knowledge than they're able to end up go apply. You learned using your own money in an idea that you believed in. Like you said, you're not going to repeat those mistakes again, at least not within your own control.
Yeah.
So just the lesson of taking action and then realizing too that when bad things happen, there's always a way out. You might not make it out completely unscathed, but there's always a way to navigate those situations. And the more you're able to navigate that adversity, the better of an investor it'll ultimately make you, because nothing's ever going to remain perfect. Especially if you're like you and I, and we plan to invest for decades. There is no perfect record.
Yeah.
Nobody will have a perfect record. And the longer, there's actually a flip side too, where if people have a really good experience for the first 5 to 7 years of their investing journey, they start to think that's going to be how it always is. And all their tenants are going to be great. They're going to stay for 5 years. They're all going to pay on
Mhm.
time. The CapEx is all going to go perfectly as you thought, the schedule. And it sets that unrealistic expectation, right? So I see a lot of great lessons you learned from that first experience that can only possibly serve you well in the long run. So you mentioned something about, oh, this is the first step of a $50 million portfolio or $100 million portfolio. What are your long-term goals for your personal real estate investing?
Yeah, that's a good question. And I think and this will tie into the you asked about family and things like that. And my goals have drastically changed through all of these experiences. That $50 million portfolio goal doesn't exist anymore. I don't desire to have it that big. It's not exciting to me anymore when I think about something of that size. I have a goal. Our first step is just like everybody else. Like right now, I think we're at maybe like close to 5,000 a month in passive income. And the first step is going to be 10, right? 10 is good, 10 a month. And then we're really focused more like location based than size. For example, I partner with a really good friend of mine now, and we've got spots all over the place, right? It's like Northern Connecticut. I've got some commercial out in Minnesota. I just sold something out in Florida. And so our goal is, why don't we just bring this closer to home? We live in a desirable area. There are multifamily around here. And so our goal is like just buy as many as we can locally. And that
Where
is,
do you live, Pat? I don't think you said it
oh,
yet.
Connecticut. I'm in Connecticut. Yeah, so that's our goal right now is like, how do we stay close to home? So stay within the community, right? I live in a small beach town. Everything we buy is community based. We're part of the chambers. We're part of this, and then live a good life.
So let's talk about the proximity and local versus long distance for a second, because I think I run a academy called the
Yeah.
Remote Real Estate Academy that is largely meant to teach people, give them the tools to invest anywhere in the country. It's mostly based in the US, but to confidently buy and operate rentals from anywhere in the country. That doesn't mean they have
Yeah.
to. There is definitely like a large pros and cons that stack as to whether to go local versus remote, depending on where you live. But so what made you reel it back in and say, hey, we want to go really local? Is it those relationships, like you said, with the chambers and your just ability to have a much closer finger on the pulse of the market, or what else drove that decision?
Yeah. It is the local feel. And like I said, I did it. I did it. I've still got property in Minnesota and I was in Florida and I had stuff in Connecticut. That was my process for quite some time. But I think I live in a very small town, and the idea of being more ingrained to the community is something that I'm enjoying. And I've spent my time prior to moving back to Connecticut, I've lived in a ton of different places. Every couple years, I would move. And so finally getting settled and raising a family and saying, all right, let's just keep it close. Let's not keep it. I think it's because my goal also shifted from like as much and as big as I possibly can to more of a lifestyle based goal setting, that it was more like, let's stay close and maximize the ones we have. And then that's it. I got no real strategy behind it. I guess it was just another like emotional feeling. I was like, hey, let's keep this close. And then, yeah.
The takeaway there is that people's goals, priorities change over time. And I know you have a young kid. I have 3 young kids now, and I can personally attest that a lot of things change in both the way you set your goals, the lifestyle that you envision yourself having. A lot of things change. And so I think it's great that you are adapting to that, and going with what feels right for you and your family. And I agree that having the local connections. So, like, just for example, like I moved to Houston, Texas last August. Our closest rental is 1,000 miles away. I can't go to any
Mm.
local investor group meetings. I know a lot of people in the markets that I invest in, but I can't physically be present there. And there is something to be said about building those relationships up and close. All this background has been really helpful I think it's a good lead in into how you ended up starting Invest Clearly, what the business is all about, because I think some of it is born from what you went through a bit earlier in your life and your career with some of the transparency issues and things not appearing as they
Mhm.
were. So tell us about the company and how it came about.
Yeah, sure thing. And it's funny. It's almost the starting it is a mix of multiple things. It's just a mix of everything that came together all at once. And so what the company is, Invest Clearly is a GP review site and deal directory. And so what this is, it's essentially a directory of every sponsor or GP that's ever existed, every deal that they've done, and reviews by LPs that have provided proof they have done deals with those GP. So what this allows LPs to do is if they're considering investing passively into a syndication or fund, they can go onto the site, they could put in their financial criteria, filter down to a short list of deals that match that criteria, and then evaluate the sponsor from there based on the reviews of other LPs that already have experience with them. It's also a value prop to the GP because number one, it's the only place on the internet that exists where LPs can find them without knowing who they are, right? By filtering them. But it also allows them to create trust with LPs simply by being transparent and collecting testimonials from their current investors. And so what this was born from was, as I had mentioned, it starts back to with the quadplex. Like I had mentioned, I'm way over trusting. I'm over trusting. I'm social. I get pumped. And at the same time, one of my clients, when I was doing sales consulting, they're called GenRev. They're an accredited investor lead gen company. So they provided a lot of top of funnel lead gen for sponsors. And so I would spend most of my day talking to GPs, right? Maybe 5, 10 GPs in a week, all of the same asset class. I quickly realized that I have no idea how to tell these guys apart. And I would go online, I would start searching for things. I was like, it's not easy to find these GPs. You have to meet them at a meetup, find them in a forum, click on a random ad, pray a good one is at the first page of Google. And then at the same time, I was like, I started really exploring becoming an LP myself, and I was interviewing other LPs. I was like, hey, how are you making decisions? I think we might have spoken on this. I was like, how are you making decisions? How are you finding GPs? And it would come back to the phrase, oh, I'd find someone I know and trust. But then they would bring up like social media influencers. And there wasn't a lot of merit of why they trusted them or what they knew about them. And so I think a lot of people were making these emotional decisions. And I kept digging further and further into this. And I would also be having conversations when I was selling for the accredited investor lead gen. When I talked to someone who spent 10 years in prison for wire fraud and he's providing coaching services on syndication, I was like, dude, what is going on here? And so my lack of like ability to do good due diligence matched with my inability to make a decision on who to work with or who to invest in led to Invest Clearly. And at the same time, the company I worked for in corporate America did something extremely similar to this for the software space. So they had a product that it was a software review product. So other users of the software would go in and you would search CRM and all of the CRM vendors would pop up and there would be reviews of users on there. And so we took what we knew about that industry and then that's where the business model came from, all of that, and applied it to real estate. And again, took the skill set, the prospecting, same thing, and we're applying it to that now.
I love it. First of all, there is such a need for this. I'm the same as you. I'm very trusting, very excitable, like we talked about. And every GP has some positioning or ability to sell and attract. And oftentimes they're charismatic. And there's a lot of nice flashy numbers usually on a PowerPoint deck with some pictures. And people can put a lot of shine on what they're doing and they can pitch things however they want. And so I think when you think about a sales process for a GP that's trying to raise money from an outside investor who might not know very much about the industry and certainly not about that person, it's easy to be convinced that something is a good investment opportunity. It's a lot harder to actually peel back the curtain and see, is this person trustworthy? Have they been in federal prison for 13
Yeah.
years? A lot of stuff that hopefully will become more accessible over time through sites like yours. Due diligence, right? Like if you're sending somebody $100,000, they're promising you an 18% IRR and 8% cash on cash. You're like, great, sign me up. How do I take advantage of these returns? It's just so much more than the spreadsheet, like you said about quadplex, like you said about GPs. So I think there's a very large need for a centralized place for people to be able to view this. With that said, I'm sure one of the biggest challenges you're facing, and I want to hear how you've gone about conquering this, is there must be a network effect to a site like this, and incentivizing, getting people to come on and leave reviews. How are you going about building the initial base of people such that there's enough information to truly drive decisions for them?
Yeah, it's a good question. And so it's, first of all, we're early. We're early, but we're picking up traction very fast. And so the way we're doing this is, again, multi-pronged. And so there is a network effect. We're nowhere near that yet. Once we reach mass adoption, it will be, right? Right now, our go-to-market strategy is a couple different ways. We're up to, I think, 38 reviews right now, which is pretty big because it's all come from one-to-one interactions, organic referrals, things like that. Right now, we're going to market to the GPs. And the way we have this structured is, and this is how we're going to say, like, we're going to build trust with the LPs, is because we have nothing to do with the deals. You can't invest through us. We don't sell LP leads. We're not broker dealers. We're not commissioned by dollars raised. So nothing, if the LP never invests, doesn't matter to us. We have created 3 different profile options for the GP. First one is a completely unclaimed profile. For example, right now we have 1,052 GP profiles on our site. Not all of them are participating in the site. Most of them aren't. And so the GP can have an unclaimed profile, which means they never want to get involved or never hear about us. They could have a claimed profile, which means they have admin access to the back end where they can update information I was unable to find publicly. And then we're going to monetize this through profile upgrades. So nothing that can ever change or influence a review, nothing that can ever rank them higher than someone else. And so I bring that up because right now, a lot of the testimonials are coming from the GPs. The GPs are reaching out to their investors to create and write testimonials on our website because they know in their investor sales cycle, investors ask for reference calls. They ask for testimonials. Right now, investors know that they're getting put on the phone with someone that was cherry picked. They know that they have control. This is the only uninfluenced source of testimonials that a GP can point people to. If new capital is on the phone with the IR and they say, hey, I don't know if I want to invest with you or someone else, they say, hey, go look at the 25 reviews that we have on Invest. Clearly, they were provided proof they've actually done deals with them, and we have nothing to do with it. And so that's how we're getting users right now. Second of all, it's the grassroots sales stuff. So we're pounding the pavement. We've got lists we're reaching out to. In about 6 weeks, we will start going to market to LPs. We're allowing the GPs to claim and curate their profiles now. And then we're going to start running sales campaigns to LPs that we've acquired list over time. And we're also going to run ads. Like I said, organic partnerships and friendships, that company that I used to sell or accredited investor lead gen for, they're arguably writing the best copy in the world to get in front of limited partners. So they're probably going to be running our ads. And so the mix of those two before we hit the network effect is what's going to get us there.
It's really smart. And so what would be the incentive for the LPs to use the site anytime other than when they're investing or looking to invest?
Good question. So we see the LP using the site at 2 stages. Number 1, at the beginning, right? I need to find a short list of deals and sponsors that match my criteria. The second is after they've talked to the IR, right? IR is investor relation, the person who's in charge of raising capital, right? So a limited partner, someone interested in investing in the deal, talks to the company's sales rep, right? And they have gone through the pitch, they've heard everything, collected the information, and now they want to validate if everything they're hearing from that sales rep mirrors the experiences of other people that have already invested with them. So that's what they would use our site from there. Second of all, what keeps them coming back is the deal directory. So we have notifications. We have a notification engine where LP or limited partners will fill out investment preferences when they create a profile. This is asset class that they're interested in investing in, states, hold periods, things like that. And they can also save sponsors or deals. Hey, I read a lot about these guys. I'm not interested. Let me just see what happens with this sponsor. Every time activity happens on that sponsor's profile, the LP gets a notification. For example, I'm following sponsor ABC. I don't know if I'm ready. Let me see what happens. Okay, they added a new deal. Okay, they got a new 5-star review. Okay, something like that. And that'll keep them coming back and engaged.
And so does the GP have to actually register that activity manually, or are you linked somewhere in a database with the SEC or anywhere where a deal offering gets made public?
Yeah, good question. We are directly plugged into the SEC. So we have about 160,000 deals that we have to clean and match and things like that. And that's the beauty of it, is because we want to make sure every deal is on there, right? For example, and I want to make sure we're not here to be the GP Reaper, right? That's definitely not what we're trying to do. This actually boosts the visibility for GPs operating in the best possible way. But what we want to make sure is the way syndication and fund investing works is every single deal or fund they open is a company. It's an LLC. And we want to make sure that if there was negligent or fraudulent activity, a sponsor can't just shut that LLC down and bury it and move on to the next one and that history not follow them. And so we're creating this that every single deal that was been registered with the SEC from 2013 to today is populated on our site and is matched up to a profile
And how do you do that?
manually and with the help of the GP. And so part of the ability to claim their profile is the GP can add their deals, historical deals and active deals to their profile. The ones that don't get added, we add manually. And so that's the scale effect we're going to see. Like right now, we're not as advanced as we want to be on the deal directory simply because there's so much, it's such a heavy lift. But we have VAs scrubbing through deals, breaking down entities, adding deals, connecting the profiles, and we also have sponsors claiming their profile. So when they claim their profile, they want to add their deals because it matches up to the search function. And so they want to represent themselves well.
Yeah, to me, and I'm not just saying this because we're friends, it sounds like you're providing a service to both sides.
Yeah.
You're giving GPs an opportunity to present themselves in a polished or professional format on your site, which will then be viewed by LPs. I'm not sure what profile modifications or upgrades you'll make available to them, but nonetheless, it's makes more sense for them to claim their profile and manage it than to just let it be like system updated or manually updated. And second is for LPs, obviously the service is clear. You're giving them a place to try and get the most impartial view possible of what it might be like to invest with that sponsor. Has there been any funny business or shady business? And then over time, what is the average? The more reviews there are, the clearer the picture will become of what that sponsor's track record would be like. So I can totally see the long game. Sounds like a ton of work.
Yeah.
And so let's talk about the process of building this company. How big is it? How long has this taken you to get to where you are now? And how do you envision the process of scaling to get to that kind of network effect level?
Yeah, that's awesome. So from the initial point of inception, we're coming up on a year. So we have there was a lot of strategic decision making before we actually got to the build point. And it's funny because I've never built anything like this. And so the concept of building software or even partnering with a firm to get it built was so foreign to us that we definitely made a lot of mistakes early on. And luckily, like for example, when we first had the design and we were first putting together what's called a statement of work, it's like you list out every single aspect and feature and customer journey possible, and we handed it over. We received a quote from this team that were like, "This is sweet. We're killing it. We're gonna get this whole thing built for close to nothing. Let's get it going. We're gonna make money by the end of the year." And then at the very last second, we brought on a CTO. And he looked at the proposal and said, "Don't sign this thing. This is an hourly, like your estimate is being quoted by hours. The second you sign this and get into it, you're not detailed enough. Your hours are going to triple. Your cost is going to triple. This is how we have to go back to the drawing board and actually create more clarification." So that was the day we were going to sign. And so luckily he bailed us out. And from there, it's been like a progress of I'm a sales guy. And so my goal is always, I want to go outbound. I want to get users on it. I want to get it in front of them. So there's been a threshold of what features do we need in this MVP, which is minimum viable product, to actually take to market to start to get users. And so we really just crossed that threshold, I would say a month and some change ago. And so in terms of the size of the company, there's three of us, right? There's me, we have a chief product strategy officer and a CTO, and then we've got a VA who is doing our deals in the background.
That's amazing. So first of all, a year, I know it probably feels like a long time, but for what you're trying to pull off, you've come an amazing amount of distance from inception to today. And it seems like your growth trajectory is pretty well entrenched. Like I've had the benefit of being part of you interviewed me a couple of times on what would be valuable. I was able to see the site a little bit behind the scenes. But yeah, for 1 year and for how much you've had to navigate, I think it's come a long way. And then let's unpack a little bit. We talked about the mindset and the anxiety of buying your first rental property, but you've now gone from being an employee to, like you said, in a more consultative role for some of those coaching programs to a real estate investor. And now you're a full-on CEO of a tech startup.
Mm-hmm.
These are massive identity I won't even call them changes. I'll call them evolutions, right? What has it felt to trace that path? Especially, I'm gonna add one layer to this question, especially while you're building a family.
Yeah. It's so funny you bring that up because the identity is something I definitely struggled with the most. And it's so strange because when you're an entrepreneur, like for some reason, everyone loves asking what you do. That's like the common question in any social interaction. And it's, it was so difficult to connect with the fact that I was an investor and I am an entrepreneur that I would almost think of like when I was investing, I would still tell people I was a sales rep. I don't know why, no reason. I just wasn't able to elevate my mindset to the person that I was acting as today. And, my wife used to call me out all the time because even when I was doing the sales consulting, I would always tell people like, "Oh, I have a small sales consulting firm." She's like, "Why are you saying small? Like, why are you bringing that up? Like, you have to almost minimize the things that you're doing and the impact you're making." And so it wasn't till recently where I'm comfortably able to say that I'm a real estate investor, even though I have been for so long. I don't know why. It was just like that mental and psychological hurdle of, hey, everything you had talked about and wanted and said you wanted to become, like, you're there. And why aren't you highlighting those parts of your life? And the entrepreneur side of things and the CEO side of things, that came a lot easier after the real estate investing. And I think it was simply because my conviction and excitement of what we're building, and it also, I think, aligns to the audience you're talking to. For example, if I'm in a very small my small town talking to someone local, I'll bring up real estate investing. If I'm in these net communities that are more familiar with syndication and what I'm building, I'll highlight that. But that's been, I would say, that identity aspect and mindset aspect has definitely been the toughest. But in terms of the family side of things, that's never been a negotiable piece for me in my W-2, in my investing, anything. And I'm a believer that everything we're building now is for a future of freedom, and you should be recognizing some of that freedom now as it relates to your family. If your goal is in 5, 10 years to never miss something for your kids or to do this, the idea that you have the flexibility but are voluntarily choosing not to do it now doesn't make sense to me. And I'm willing to give up other things so I don't miss some things for my son. And that's been my big priority.
Yeah, I struggle with this all the time. I got three young ones, and I have very big ambitions for my real estate business, my coaching business, a lot of stuff that I do. I also work full time, and I've progressed a lot in my career. I enjoy what I do, and I'm grateful for all the progress I've been able to make across all those mediums with a family, and especially with a newly growing family. I resonate so much with what you said, where it's like if you're voluntarily missing things now, even though you say the person you want to be 5 years from now would never miss
Yeah.
anything, I don't know, you're missing a little bit of the point. And so it goes back to, I know you said you've worked with mindset coaches. I have too. It's something I believe in that a lot of people haven't even heard of what a mindset coach is. I think a lot of what we've worked through in the mastermind we're a part of is set goals based on where you want to be, but start behaving like that person would today,
Yeah. And
right? So go
I
ahead.
was gonna say, so that I had a call, never forget it, as long as I live, when I was in that when I was running. So I would do all the intro calls, all the sales calls for that mindset coach. And I got on the phone with somebody, wasn't a fund, wasn't a syndication. I think the guy had 1,200 units. Like he owned 1,200 units himself. And I used to ask three questions on every single call. One of them was, "What's your goal by the end of the year? What do you think is possible, and what do you think is impossible?" And I'll never forget on the goal, he said, "I want to add 200 units before the end of the year." I was like, "That's amazing." We talked through that. And I said, "Okay, what's something that would be impossible, would be awesome if it happened?" He said, "I want to turn my phone off for 2 weeks." I was like, wow. So this guy had everything everyone is aiming for, right? There's a large portfolio, seemingly financial freedom, but he also did it. And so that conversation just completely reframed what I considered to be financially free. And I wanted to bring that story up.
No, that is unforgettable, right?
Yeah.
Especially when we talk about influencers, we talk about the way people present themselves in public, especially like folks that are raising money to make themselves appear a certain way. But everyone struggles with a lot of the same stuff: focus, mental health, balance. Like all these things are elusive, especially to people who are high performers or have big ambitions. And it's just interesting that the further people get along in their journey, especially if they're trying to build wealth, the harder it becomes if you don't prioritize it early. If you don't prioritize your physical health, your mental health along the way, you're going to maybe progress towards some of your financial
Hmm.
goals, but you might be paying a higher price in what you're giving up along the way, your relationships and your health. And I totally feel that with the identity as you evolve with your professional identities, the family part is non-negotiable. I feel the same way. And I do my best to protect the time that I have set
Yeah.
aside for my family, whether it's little things like putting my daughter to bed every night or having a specific one-on-one block for each kid. I think if you protect that stuff up front, first of all, people respect it more than you think. And second of all, in that habit, you're in
Yeah.
that rhythm and you're not missing out along the way.
Did man, and I'm
So that's
sure you just had the twins, and I'm sure you've already seen like how fast it's passing, man. It's so limited, and again, this depending on what you believe, we got one shot at this, and it's finite, and it happens fast, and money can always be made. That's my way of thinking about it. If it's not this, it's something else, but you'll never gonna have another shot at again the 18 summers you have with your kids before they're going off on their own. And so that's how I think about it all.
100%. Because my kids are 3 months old and 2 years and 4 months old right now, I'm just so aware because they grow so fast at that age. You feel time
Yeah.
passing. You don't want to feel like it's passing you by. You want to feel like you're there. And because of that, it just changes. Yes, you have 18 summers, and I do believe you should really dig in and take advantage of all 18 of those. But that first 5 or
Oh, yeah.
first 7, that's when your kids actually want to be around you
Yeah.
before they start getting friends that they'd rather spend time with their friends or go off and do things or meet partners, all that fun stuff that
Yeah.
you do as a kid. But so yeah, I'm very interested in being here for the most important part of our family's life. And that's one of the reasons we're in a group together. A lot of the folks in that group are extremely ambitious. But what I love the most is that people do center back on the things that are important to them holistically,
Yeah.
not just financially. Even if we all love the financial benefits of investing and building businesses, but there's a bigger
Yeah.
picture in play. Pat, you have an amazing story, man. I mean
Thanks.
it when I say you are a true hybrid real estate professional. Your progression, how you've been able to, you've taken the skills that you built and you've continued to let them compound. You're not pivoting and abandoning the things that you know are within your zone of genius. You're using them to your advantage to become a real estate investor, to become a business owner. You're obviously a very passionate person. What are some pieces of advice you would give to someone who's really just starting out? That's one thing I like to give our guests an opportunity to share. And then anything else you'd like to share with the group before we sign off?
Yeah, for sure. Speaking from my experience, and I would say starting in the sales world, is I'm a firm believer that sales is the absolute most applicable skill set to anything. I can't even detail what that sentence means because it could be applied to any industry, any role, anything you're doing. And so, if you do have a sales rep that's listening to this that may be sick of the W two, you just go for it. You'll be surprised how much business comes to you from your sphere of influence, from the people that know you, and it's possible. The number one thing I would say for those that are starting out is we've talked about mindset coaching, right? It's master the mindset because you will lose the psychological game long before you lose the execution game, in my opinion. And what I mean by that is you're going to face hurdles outside of your W 2 once you leave that you won't even think possible. And it'll likely happen all at once. And that's what you have to face. And there's going to be, you know, you really have to make sure that your daily insecurity does not overpower your long term certainty. And if you can master that, where you leave your W 2, your insurance is gone, your family member gets sick, your car breaks down, your lease is up on your rent, you're going online, and people you used to outperform are buying bigger houses and going on vacations, but you are dialed in to your own path, and you realize that the emotional, I would say, weight that you're feeling does not reflect what your outcome is going to be 5, 10 years down the road, you're going to make it. And that's my biggest advice is master, get your ducks in a row with what does the worst case scenario look like? And then how far beyond that are you willing to go and go for it? Right. And expect absolutely the heaviest things you can imagine, but also know that they're going to pass. And if you can master that psychological aspect of it, the execution, the strategy is going to come easy.
Money.
Yeah.
Couldn't have said it better myself,
Yeah.
man. Thanks so much for coming on. I'm looking forward to having you on again
Thank-
and hear the progression of how the company's going in real estate and all that. Where can people learn about Invest Clearly? How can they get signed up and start contributing? I know this site is only going to get stronger as it goes. Where can people find you?
Yeah, perfect. Invest Clearly. Our website is goinvestclearly.com. I am also on every single social media. This is an area of improvement I need to focus on. So I'm going to start posting all over the place. Invest Clearly on every social platform. You can also reach out to me directly. Email me, pat@goinvestclearly.com. Anything and everything, I'm available.
Sounds good. We'll make sure all those links are in the show notes so people can come find you clearly. No pun intended. And thank you again so much for being here. And we will talk to you soon.
Yeah, thanks, Aaron.